Hey everybody. So what we're going to do today is run through the market and what exactly happened. Why are we just trending down? Why is this not going back up? We're going to get into some key issues that are going on with the market at the end of the video. We're going to look at some key levels and I'm going to try to explain a little bit what's happening here. But as always, please subscribe to the channel and turn on notifications because what we're supposed to go over today is going to be very timely for sure. And it's going to be actionable. So you have about 30 ideas here that every one of them has some kind of action that's lined up, something that's going to happen with them. Whether you're long them or short them or looking to get in them or out of them, there's some really interesting moves out there. So let's just get right into it here. And this is one that I have, looked at previously. And, I was asked about it today and, everyone knows I stay away from these lower price guys unless I see something very interesting, and I'm going to be blunt. I see something very interesting here. I don't know why it keeps giving me that little nudge, but let's just do it this way. Let's get rolling. So here's what I want you to look at here. Okay. You're at about a year, right? Takes you to about that $5 level. Look at this volume that is coming in here. Okay, your average daily volume line is down here. You're about 4 or 5 times average daily volume. Okay, that's enormous, and you did it on a breakaway gap. Okay, so you should be able to see this level and the breakaway gap. You opened and you just went up all day. That's exactly what you want for any stock whatsoever. You'd love to see this kind of action, and you'd love to see that kind of volume. Now, if you look at this volume bar, there was only one other time in the past year that this happened, and the stock went up pretty high, pretty fast, right? I mean, you go back, you don't have anything even remotely like that. So for people that are looking for playing these smaller names, this got very interesting, and you're seeing the pushes, right? You have the first push off the $2 level, this push off the 230 level all the way up to 284. You think it's going to roll because that's what it always does. And then now you have a gap up to here. I don't know what the news is. It seems to be Ashford Hospitality Trust. I'm not sure if it's a dividend play, but this is moving. So I would look for a higher high, which looks like you're right around the 347 level. Let's call it 350 to make the math easy. So if you see a move of 350 here, this can go to that $4 range fairly quickly. You've broken this area right here, and let me just point this out because this is kind of interesting. So, you haven't broken one of these yet. And we're going to have to zoom in on this just a little bit so you get it. So here's your downward trend line. You hit here on massive volume. You bounced off of it. I would call these rejects. Everybody knows that, right? I refer to them as rejects because they reject price. And then you're going higher. So that's really what you want to see. And I guarantee that there's action here if we overlay these moving averages. Yep. And I haven't really looked at these yet. Yep. So this is even more interesting. I'm gapping over. The 21 is now support. I've gapped over the 50 and the 200 day. So that's exactly what you want to see. Like exactly. So 350 takes you to 395. It's these, this is a short-term trade. I'm not telling you to stay in this for the next year and watch it, see if it goes up. But I think if you get through this, you're a $5 stock. I think that's pretty clear. And usually when you break these wedges, your first target is the top of the wedge, which is not here, but here. So you're looking at a minimum of 440 if we get above that 350 level. That's how I feel about it. And I don't really like these smaller names because they're easy to manipulate, but this one's very interesting and people should look at it. So APPS, I was asked to look at again. Everyone will remember this. I recommended taking a look at it when it broke out right up here, right? We broke out. We looked like we were going to break this cross-reference line, all these crossed lines. I was explaining the convergence points and why they're important. Then we tried again and failed, and then we rejected back. Usually these rejections revert to a mean. That mean usually is the 21-day moving average, which just happens to be the standard deviation of a move. And you should be able to recognize that from the Bollinger Bands. So let me just throw the Bollinger Bands in here so you can see what I'm talking about. So you can see that this is the second standard deviation move. This is -2 standard deviation move, and this puts the standard deviation on the mean of where the stock is. That's roughly your 20, 21 day moving average, right? Just remember that if you're not familiar with that, it gives you an idea of when you revert to the mean. And then whatever side of this line you're on of the 21 day, and some people use the 20, I don't really care. But when you're split hairs like this, what you need to do, just think about it from this perspective, that the bulls are in charge when you're above it and the bears are in charge when you're below it. Just think like that and you'll save yourself a lot of money. Okay. I'm not saying that you don't trade it when it's down below the 21 day. Just understand that the bulls are not in charge of the move. That might mean you change your strategy a little bit and you're buying dips instead of, buying rallies, and you're selling rallies and you're buying dips. Sound familiar? Like something we should all be doing right now? Right. I mean, if you look at how the market's trading, I'm going to get into it, but if you look at how the market's trading, that's exactly how you should be trading. You shouldn't be buying breakouts. Bonk, 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 right? You should have sold every single one of these over the past year. Okay. That tells you that you're in a different environment. Look at every sale as it broke down. They've all rallied back up. What happens now with this? For someone that's looking at it now, I mean, I'm going to be blunt. You cannot look at this here. So you have the 50 and the 21 that are now rolling down. We've broken the rising wedge, which I pointed out was very bearish. And I said, you're going down in the 60s. And that's exactly what we did. We tried to rally over 76, 74. We cannot rally over 76, 74. Get in there, zoom in, check out what's going on, right? You are not getting above there. It is not happening. I can't be any clearer. Do I want it to happen? Yes. Do I like the name? Yes. I've been playing with this name since it was a teenager. So yeah, I want it to work. We've been in this thing forever. But what feels like forever. And then you watch them grow up and become big boys, but playtime's over right now. It hit the century mark and now we're just in for pain. But this is something that you really need to watch. And I'm going to point this other level out to you. Okay. See this level right here that you're just sitting on, right? You broke this wedge. Now you have to hold the support line that takes you to here. If you break the $70, your best hope is to hold 67, right? Realistically, you're not going to hold that. You've broken the upward trend line. You can't get above the downward trend line. You've broken the rising wedge. So what's next? You fill the gap. The gap takes you to $65. And then you hope you stop there, right? Because if you don't stop there, you just have all these little wedges that you're going to hope catch. That's all you're doing is looking for minor supports until you get down here. And the 200 day is the last bastion, which is $50. So this is not a buy. If anything, you're on the other side of it after today. You're actually looking at a short. So, and I don't know that I would do that here. It's already down a lot. You're trying to do it for $5-10. I really wasn't asked about this one. I was asked about NVAX, which we're going to get into, but I really didn't get a lot of interest in this. And it's kind of funny. 3 weeks ago, we had this on the top 10 list that we do every Saturday. And thank you again for the turnout last Saturday doing this live. It was so much fun for me to interact with everybody and get to know everyone. I actually am enjoying it. But I didn't get any real questions about this one today. I thought it was interesting. I didn't get any on ZIM, which hit new highs. I didn't get any on Vizio. So it makes me wonder that I'm not explaining the processes right on what you need to be looking at. If you follow the newsletter, which is free, and there's a link in the description, you should have had a good day today. ZIM was up 3%. Vizio, VZIO, was up 7% today. MUDS was up 9% today. The stocks from yesterday's short list, DIX was up, DKS was up 4%. So, you get some movers. The CVNA was up to almost $300 at one point, 260, 296, 97. So there is action out there. You just have to be, as the newsletter said, quick or dead. That's what you're dealing with right now. The way you should be looking at trading this market is very, very simple. Right? And I called it out today, and then I called when I was wrong, and I'm going to point it out. Okay? Breaks. I think this is the 15-minute on BNTX, and I just want to point out what I said and where I was wrong, and then where I knew that I was wrong. And you can go look at the timestamps on Twitter. So we gap down like this. That's about as nasty as you can get, right? Everyone that did that candlestick chart knew that this is all price rejection. Okay, that's anyone that did the candles, how to trade candlesticks. I'll link the video to this one. Knows that like this is as nasty as you can get. It's just pure price rejection. So I'm looking at this going, oh well, that's it. Okay, well it's had stay in the sun, and then it breaks here and breaks out of the first 15-minute opening range, and then I'm like, huh, that's interesting, right? It stopped going down and it reversed. What is this pattern that just developed here? It's not a true morning star because this really isn't a doji, but that's interesting. You would think that we would have came all the way down. If the next bar is a higher high, we're banging a Yui. Guess what it was? Next bar is a higher high. That was your trigger right here to go long. And I put it out there on Twitter going, we're making a U-turn. And we did, and we went higher. And this was a very simple trade for those that did it. And if you didn't do it, that's fine too. In this type of tape, you need to have some levels of confidence. So essentially what you did was once you broke this level right here, that was your trade. Okay. I'm trying to get exact here so you can see it was actually like 20063. Yeah, that's taking me a little higher than it should be. So you use this low as your stop. That's it, right? So you have a 4-point stop roughly on this trade. And that's more than you want, but then you're like, geez, well, if it goes to the top here, I'm at least at 1-to-1, or 2-to-1. So, all right, I'm going to try it and see what happens. And then you got up here and you floundered, and then you closed at an all-time high. Okay, when was the time to buy this? Well, sure wasn't during this. It was when it dipped. And that's the point that I'm making that just took me 5 minutes to get there. Look at buying the dips in the strongest names, not buying the dips in the weak, crappy names. I can't be more clearer to stay away from, a lot of the SPAC names, a lot of these IPOs that came out with direct listings, i.e. Coin. Like I really got very annoyed the other day, and I was trying not to, about people recommending Coin and then someone recommending Mara. I'm going to get into it in a moment, but let me just stay focused before I go off on one of my rants. So 208.92. Okay. That was right where you closed at, right? You can see this level here. The question is, what do you do? This is not done. I mean, I hate to say that, because I've been saying here that, geez, you need to get out. But there's this pattern, and what's going on is just look at these red bars and how small they are and how they're all like little dojis. And look at these green bars, how every green bar is closing at the high. Okay. And look at the differentiation in volume color from when we're selling to buying. Now, I don't really get into this because it's pretty in depth, but if you look at quarter over quarter of institutional holdings in this name, you are in 70% double digits on institutional holdings in this name. They're not buying for a day. They're buying whenever they can. That's why you're seeing these dips being bought. So keep that in mind. Look for dips in this trade and look to buy those dips. Now, if you're in this, you are set up for a binary event. By binary event, meaning if something happens with the vaccine that they're putting out there, the stock's going to have a bad day if there's an issue. And I think that's what's going on with NVAX. Something's coming out. We just don't know what it is yet. And we're going to get into that. So CCJ was one we looked at before, and I wanted to look at it for the gentleman that asked solely because, yes, you had a great move today. Yes, you're above average volume, but we're at the same exact level where we stopped last time. Right? So this is not a buy until I get above this level, 18.75. And then just remember, when you get above there, you're in this channel, right? So, and that jumped a little bit, but that's okay. We're just going to keep it rough. I'm going to keep it there. So you're in this channel, right? So before you can even get through that channel, you have to realize that 18.75 is going to take you to about 20.75. So you're really only looking at a 2-point move, right? Before you get to the next resistance point. So just keep that in mind. I like the idea. Strong all day. I mean, you opened right at the downward trend line and the 50 and the 21. I mean, it doesn't get much cleaner than that. The open's the low, above average volume. I wish all my stocks looked like this. I just, why I will not buy this is because I am looking at limiting it by about 2 points. So, return, and that's not of interest to me because of where the stop would have to be. So this is one where I got a little annoyed the other day. People recommending it, and that's why I came out with that tweet saying like, look, please stop being sheep, do your own homework. Okay. The only person that made money on this so far, let's get rid of all this. Let's get rid of all these lines for a moment, and we're going to draw them all again. So just to go through this, okay, here's what transpired with this stock. Okay. It went public as a direct listing, meaning they went and sold to whoever they could get to buy, right? That's what they did. And that was the price, because they wanted to keep all the money and sell their stock at the highest price that they could, okay, including the insiders, okay? So what you have is you have an open here, which is where you open at 380. And then they run the stock all the way up to here within the first hour, 410, okay? Everybody buys that bar, and then it runs up. You get price rejection because everybody doesn't want to pay 200 points higher than what they just sold the company for. When they realize what they own an hour later, you come to here. Now you're at 363, and nobody that bought in the first 2 hours is up any longer. So whoever's telling you they made money on Coinbase probably didn't, okay? So now you're down. Now they see this. Now you break that lower low. Any institutional trader or any high net worth trader that's worth his salt, the minute that you broke this level, they were gone. And that's exactly, they just didn't care. Get me out at any price. That's what happened. You saw the bounce. You saw it try to hold. And the next level that I gave people to watch and said, if you break that, you're going into the mid to high twos. And we broke that 310 level. This is really 310. Okay. And then you can see you tried to get above it. There's your little morning star. That failed. Couldn't get above it. So you have a bear flag. The bear flag breaks down. You have your inversion here. Still can't get above it. Okay. And there's people that are jumping up and down telling you on this day, on Friday morning, on this hourly, that you need to be buying options. And if you did, you got crushed. So that's why I'm stressing to do your own homework. Now, the question is for the person that's asking, what do you do now with it? Well, what do you do with a stock that opened at the high and closed at the low? Okay, because this is where we opened. This is where we closed. Okay, until some news comes out that justifies where this is trading at, this is going absolutely nowhere. Okay, I can't make it any clearer. You need to get above 310. If you're not above 310, my advice to you is every time it rallies, short it, sell calls, buy puts. It's just going to keep trading up and sucking out premium. That's all they're doing. Every time this rallies, it's being met by insider selling or institutional selling every single time. And it is just like clockwork. You can see it. They spike it up, right? All these spikes, you see them? Just so we're clear. See when the time the spike is? In the morning? What time's this spike? Early in the morning? Okay, right off the open. When's the spike? Okay, early in the morning. What are they doing? They're spiking the stock at 9:30 every morning so that mom and pop get excited. See if I can find another one. Here you are. So that mom and pop will get excited, jump into it, and then they can get out during the rest of the day. That's what they're doing. So just understand that. And this is why I get annoyed when people are out there telling you to buy this stuff when they really don't understand anything. They are looking at a chart and think they understand what's going on. And there's more nuances to the bars. Right? Not only do you have to know the bars, you have to know the pricing, and you have to understand why those bars are developing at that particular time. Okay? It's so that they can shove it down retail's throat. And I find it highly annoying, if you can't tell. So, they just should have gone public, just like everybody else. And they would have had support for the stock, and maybe they wouldn't have gotten 300 for their own shares, but they wouldn't have decimated people either. And, I think when Robinhood goes public, they're probably going to try and do something similar. So here you have DraftKings, and let's get back on point, start finding some actionable ideas where we can make some money. So here you have DraftKings. Rallied up, formed an H. The H broke, tested, reversed the H, came back up. Let's get rid of these indicators so you can see what I'm talking about. So here's a lowercase h. Right? We broke it, came down to 55, bounced back up to it. What did we bounce up to? We bounced up to the lower channel trend line of the upper channel, and we rejected. It's not what you want to say. Higher low, right? This is not what you want to see. So what you're probably going to wind up doing is running back down to this 55 level. The reason I brought this up is because people think it's actionable and they want to buy it. Okay, there's nothing actionable about not being able to clear above the 21-day moving average and can't even get near the 50 anymore. Understand what makes this actionable is selling it above the 21-day until you start clearing these levels. For me, unless you're looking at a short-term trade from here off these lines, which you could do up to here to 62, you should not be looking at this until you get a close above 64.20, which has not happened since, mid-March. So that's why it's actionable. If you break this 55, which, I think is a coin toss. I think you can break 55 at this point. You're going through a draft in the NFL right now. You have baseball people are betting on, UFC's got some action, but you have March Madness that's really wrapped up. So, there's not an entirely lot going on right now for them to drive revenues. And I'm not really sure of how seasonal DraftKings is. So I'm assuming it's seasonal. I don't know that. It might be more significant fundamentally that they're adding states. So it's just an opinion on how I think it's going to trade. And we all know what an opinion's worth, but there it is. I threw it out there. 4, I'm really glad someone brought this up and asking me if they should be buying it. And I'm hoping that when you look at this, you already got your answer. So the answer is no. And here's why. Here's your trend line, okay? And I understand that you've broken out here, and that's why you hit this trend line, right? Then you failed here. Look at what you're doing. Here's your downward trend line that you've broken, that you opened below, rallied. Now you're above the 21-day, which is great, but where are you sitting? Okay, you have to flip that channel. Okay, you do not buy, and that was a huge mistake with someone that recommended Mara on Friday that you need to get into it. And they bought it right at this channel wedge. I'm going to get into that one as well. And just so people understand this, these channel lines, they're there for a reason. Okay. They're not there just so I draw them so people think that they have value. And when you're hitting this and you're butting your head against it, you cannot go near this, even if it keeps trading up. Because what happens with these lines, right? When you flip them and you go back through them, it's nasty. Okay. So like, here's a classic example. We rejected the top one. We went through this one. It got nasty. When you bounced here and you couldn't get through, you dropped, and it happens over and over again. And these are, I'll just pick one of them. Okay. There's a 20% drop. Okay. So if you're counting this one and you want to see what a 20% drop looks like to match something like that, put you here. So can that happen? Absolutely. You need to be aware of this, and you need to be identifying patterns. So this is nasty stuff. There's nothing here. Am I happy that we're above the 21-day? Absolutely. But I'm just consolidating. And the other thing too is just to make your decision even easier. Forget about me and my wacky trend, channel lines. You're right there, $99. See, $99 here, it's all placement, right? And I'm spending a lot of time explaining things and educating tonight, and we're going to get into more ideas that are actionable, but I try to educate with this. See how $99 here is way more significant than $99 here? So the one gentleman asked me, he said, well, it's over $99. That's what you're looking for. That's what I was looking for 5 days ago. 5 days ago, when it broke above that, look at this. It could be in a textbook. It's so perfect as a rejection, right? Here's the trend line. Here's your downward trend line. And here's your resistance level. Bonk, fails. Bonk, fails. So this tells you what you're dealing with. You have rejection right here. Bearish engulfing. You think that's over because you're doing this? Technically, this is a flagpole, and you have a bear flag going on at the top of a double top. If you really want to get technical. So no, this is not something you run towards right now. You sit, watch, and wait. When would you become interested? You got to get me above this line right now. Quite frankly, before I get involved, unless I see massive, massive volume, I'm at like a 103 close at this point. It's a monster stock. It was a monster mover, but it needs to really develop here, or it could fall apart like UPST or Futu did. And we were asked to look at Futu, so we're going to. I like today's action in it. What I don't like is just how this is just completely dried up. We've completely dried up, and people are just losing interest in it. Which is not the best, and maybe they'll come back to it when we start to move. But let's just show you what's going on here, because I don't need this line there anymore. And we're going to pull this here, and let's just grab this and throw this down here for a minute. So here's your channel. You're rolled, and then you formed a hammer. Get above the 21-day on this, and you could run the 157. So if you're looking for a short-term trade, it's right there. And you can see how this thing is batting around between 145 and 157. Sometimes you break down to this side. See how these match, right? How you've broken out. So you broke out here. So now an equal and opposite reaction happens, and then it starts going back again. So this was where this is where you should have really bought if you wanted to be in it. But what do you do now? There's nothing to do here. Flip a higher high, get above the 21-day. And then if you want to buy it with a target of 157, 158, I think it's great. And I think you should look at it. GIK, I wanted to show this one because people are looking at these SPAC names still. And, one of the key things that I would really want to go over is I think a lot of these SPACs are going to trade to levels that the private equity VC guys brought them to market at. And I think they're also going to trade below. Some of them are going to trade below them and just be, I won't say outright frauds, but they're just not going to make it. They're going to reevaluate the entire business on some of these, just because there's too many of them, and they're not going to be able to go back to the capital markets to raise capital the same way that they thought they were going to be. So it's going to stymie some of their growth. Which names they are, I have ideas. I think it's going to be some of the EV names, but I don't know that for a fact. It's just a feeling. GIK, look, we drew this trend line a long time ago. And that's why I say leave them in. We cannot break the 21-day. You're forming this little head and shoulders right here. This is going to break. I mean, this is actually a short. It's a short even here. And then you just leave the short on till you close above the 21-day. And if you've done that, just to put this in perspective, if you just shorted it below, every time it's below the 21-day, you could actually even do it up here. It's even higher, right? To here. So far, you've made 33% on your money. But realistically, what I'm talking about happened here. So what does that get you? 48% you'd be up in 2 months just by doing that. So, it's not over because you didn't do it, right? So you can still use this line as a short. I don't know where this is going. If I was a betting person, this is going to 5. Maybe it holds 5. There's no support. There's nothing. This is where the deal went through. And someone was mentioning that they're talking about, the merger is going to go through. Okay, look, that could be the last thing that this ever does, and have that merger go through. Now, what's going to happen to this stock if the merger doesn't go through? I have no idea, but the people that were interested in the merger probably, when it was probably announced here, and I don't know this, I'm just speculating by the price of the move and how this was flat. The people that were interested in the merger at $10, are they interested at $8? I don't know. I don't know the answer to that. People that follow this story a lot closer will have the answer. Mara was the one that I got, a little upset with the other day, just because of what I saw, people recommending it and really having no idea what I'm trying not to curse, that they know what they're doing. So let's get rid of my 400 lines on this chart, because that's just ridiculous. You guys, no one's going to follow that. So let's just get rid of everything. And then I'll just put the name Mara back in, and we're going to get rid of all the indicators, and we're just going to look at price for a minute. And then we're going to put the bells and whistles back in. So we're going to put Mara up here. We're going to close this down, put this right up here. Okay. So when you see this and you look at this, do you see anything just here that is like standing out, right? And that's the very first thing that you do. And just go, yeah, sure. Well, there's a level here for sure, right? See that level? Bonk, 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 bonk. Yeah, look at how we held here. It's perfect. Okay. So I have a major support level at $28. Okay. Now, let's go to the next one. and say, okay, well, do we have any other support levels? Well, yeah, we have one right here. We keep hitting here and we reject it. And then when we flip it, it becomes support. And then when we go through it, it gets really nasty. Okay, so now you have your major resistance and you have your major support line. Okay, and here's obviously, this is the peak, obviously. Okay, this is where you're at now. Okay, what type of pattern do you have here? Well, you have a rising wedge that keeps rejecting and unable to fill this gap. And let's look at this gap. Okay. That's the close from the gap. You cannot get above that. And why I was getting frustrated is the person not only was saying to buy into the failed gap, which means that that they don't even understand how candlesticks work, because this was all price rejection. So why would you get into this? And then what did they do to people? They gapped it up right here, and then they ran it back over the resistance line so that you would think it's going to go. And then what did they do? They jammed it lower than the close. Where do you think this is going tomorrow? Okay. There's a negative divergence between what the miners are doing and what is going on with Bitcoin and Ethereum. And that's why I said about a month ago, if you want to be in the miners because you think the miners are a good business, do that. If not, buy Bitcoin. If you go back and take a look from when that statement was said, you'll see a huge differentiation between the two. And the other thing is, how do you recommend buying a stock that can't get above the 50-day moving average? There's no reason to be in this. If you want my advice on this, if it breaks a lower low, it's a short. It's a short to the 38.7 line. And I do think that this is a short. And I do think it's going to take out that lower low. If Bitcoin's rallying and this is no longer going up, what's going to drive it up? I mean, not its revenues. They're hardly there. So just keep that in mind. So Melly, I was asked to look at this one, and this needs to get going here, and that's why I want to really view this. Do not buy this yet. I can't stress that enough. See this level, 1628.91. I've been watching it for months, waiting for it to break above there from when we broke here, right? And we just cannot do it. We got above the 21-day. I thought we were going to do it. We didn't. I'd love to own the stock. The growth, sickening. Like, it's a huge, huge player in the space. I mean, it's the player in its space, but it's just not acting right. Now, we are getting a little bit of love with the 21 crossing the 50 here, but what can't we get above again? Right? 1628.91. Do not touch this till you get above 1628.91. And to clear this up so you understand why I'm saying that is, there's an issue here that's going on. Everyone knows that rising wedges, that when you follow me now, you know that a rising wedge is bearish. Right? It's not bullish. This is not, yeah, can you make money? Sure. But it's a bearish chart activity that does not end well. What's happening here? You have this trend line right here, right? What's happening on that trend line? And yeah, I'm going to start getting into more process. And that's what I'm doing tonight. So what's happening? It's rejecting it. What do these lines mean? It's price rejection, right? Why would I get in front of something that can't get above, right? The 21 and the 50, can't get above its rising wedge, and can't get above its major resistance. Why am I running into that? I can find other ways to lose money that are more fun. So realistically, if you break this, you're going to here again. You're going to go test this 200-day again. And some people might want to do that short. Some people might not. So, it was interesting. I've stated this a couple times, how I was trading this, where our stop was, why it was where it was. We failed the upper channel twice. So right now what I'm going to do is I'm going to get rid of this arrow that's going to confuse people that aren't following me from the newsletter, and look at the channel that we drew and look at where it stopped today. So if I was a betting person on this, and we're going to go through and really drill into the volume, if I was a betting person on this, I almost feel like it's going to flip tomorrow and run. And you saw the action in Playboy today as well, right? Playboy's not on the list, but just look at that one, PLBY. Something's going on with these NFT stocks. They got a lot of action today, the real ones. And Muds is a real one. I mean, if Tops can't figure out how to make money off of NFT, nobody can. Well, except maybe Playboy. But you see where I'm going with this. We opened at the low. Here we go. Boom. We never even got back to this level, did we? Tells you everything you need to know about this. And that's why we left it in the newsletter. And it's why we moved the stop up. And I'm hoping that people that are following me, the beginners, and because we have a varied group that follow, but I'm hoping you guys are getting this where, I don't know what's going to happen. I can only set the parameters of what good money management is. And I'm like, if we get stopped down during a 1530 close, we still make $1 on the rest. We trimmed up here because that's what we said we were going to do when we were up 20%. You make $1 there. Okay, so we make 7%. That's not great. You made 20% of your trim trade. All right, you made 7 to 12% depending upon the amount that you trimmed. We're on to the next one, or we'll look for it to set up again. But when we trim and then it comes back and closes at an all-time high, well, now we're in the driver's seat, aren't we? Because when you flip this level, where's our resistance going to be? Well, you should be able to see this, but that's going to be your new, or your new support line. Whereas the stop is going to wind up moving up, probably along this line. So this has huge potential. Let's watch this tomorrow. If you're not in this and you're looking for a fast trade, you break this line and this 1785, and you get to 18. This can rip. This could really rip. When you break these, you've seen this. The people that have been in the newsletter for FUV and Tiger, Tilray, when they move like that, Tilray we made over 200% on. So when they move, they can really move, especially when you have nothing else out there outstanding. So I would really focus on this name tomorrow and pay attention to that move. I can't stress that enough. NGA, I wanted to look at real closely because we're dealing with another SPAC. Look, you have to close above these moving averages, and until it does, just avoid it. Right now, you've got nowhere to go. There's tons of resistance points here, but I just want to hammer this home to the person that's in this because this is actionable, what took place today, okay? You failed to follow through. And not only did you fail to follow through, you opened at the high, you closed roughly at the low, and you encapsulated this other bar. For those that studied the candlestick patterns, you know what this is. You know it's a bearish engulfing. You know what's going to happen next, right? We're probably going to revert to some mean. Where's the mean? 1661, okay? Let's hope it holds 1661. If not, it's going to roll. So I was asked to look at this one now. It's taking a little bit of time to load in there. So let's just get into this. And because I really saw this and was like, wow. So I'm just going to be blunt. You need to get out of this if you're in this. I can't stress it enough. This is not something that you buy. If you're interested in buying it, you need to wait till it closes above the 200-day. So you gap down, had huge volume, and let's look at that volume bar. Okay, let's look at that volume bar on a weekly. Okay, so here you are in the weekly. So you've only really had one or two other times we've ever had volume like that. Okay, and here you are sitting at what? The 50 week. Okay, and as everybody should be aware of, your 50 week is going to be obviously very close to your 200-day moving average. So what does that mean? That means that if you're in this and you did not sell, you need to sell. To me, this is an outright short, and I'm just going to walk you through why. I've got the 5-8 crossover here. I've got the 21 crossing the 50 here. I broke the 200. I have a huge gap down, closed at the low, can't hold. Price rejection all in here to the 50 was all rejected the whole way back down, opened at the high, closed at the low. Like, where's my stop on my short would be the high of today, which was the open. So let's just call it 508 would be my stop on that, on the short. But this can get nasty. This can go down. You're looking at like a 10-point stop roughly, we'll call it. And you're looking right here at like that 464 level, which is, hopefully that holds. And that might not hold because of what's going on here. That may break. You might go to the sub 400s here. So this can get a lot worse. You need it to reverse above that 200-day moving average before you consider buying it. It's just not acting well at all. NVAX. So we're having a little issue here with this. We're a little slow tonight with the loading. So NVAX, I just want to talk about. I had on the list as one to watch on the week as a stock to buy. Obviously, that's not the case. we were looking for one particular thing to happen. And I just want to point that out. I mean, this is why you set parameters and levels. We were waiting for it to break here and it just didn't happen, right? We wanted it to break this wedge. It broke the exact opposite way. And this morning I had people asking me, do I buy it? And I'm like, off the rip. And I'm like, no, like you gapped below this. You gapped below major support. I don't even need moving averages for this. We can put them in a moment. And then you closed at the low. Now, I did trade this off a very, very simple pattern. Okay. Back here, you see how this is breaking down, right? And then you have this little pattern here. Let's see if we can just get that out. So you see a little Morningstar pattern here. I don't know if we can blow that up a little bit more. Blow that over. And then we can probably pull that as far as we can pull it over. There we go. So basically, this is why I recommend that you look at these patterns. Okay. There we go. All right. So here's your opening, right? Collapses, keeps collapsing. First run, the first runs never work usually. I mean, they can, but like the first rally does not work. But you can see the bear flag here. I'm just using a 1 minute. Here's your bear flag. It breaks. There's your short, right? Tries to rally, fails, okay? Fails, and then you just get capitulation with it. And there was more to it where I overlaid RSI with it. But if you look right here, you have a little Morningstar. And you have a little Morningstar against a little trend line here too, right? So when you see that, and you see the coordination of that plus the RSI, I'm not going to throw that in right now because we're already running behind. But that was your trade. And then I'm like, okay, well, we went up. All right, we're going to try. And then we came back down. Then we failed again. And then when we broke this, I'm like, all right, that's it. I'm out. That was it. So that was it started breaking lower lows, and then you can see where it went for the rest of the day. Okay. It just fell apart. Now, the question is, what do you do now? I had someone asking me if they should be buying this now. And the answer is no. There's something seriously wrong here that we just don't know yet. The amount of selling that came in today was staggering. I mean, just look at the selling. Right? I mean, it was just straight down. I think we closed at 195 after hours, and let's just see, we're at 193 right now. So I wouldn't be surprised to see this in the 170s tomorrow. I wouldn't be surprised to see this gap down even more. Something's wrong, and we just don't know what it is yet. When you see a move like that, you just don't go down 20% for no reason, which is roughly what this was, right? Let me just measure that out. So 22%, sure. So, I mean, you just don't do that. There's something wrong. And the BNTX was just too strong. You need to hold 172. I don't even need moving averages on this to tell you, but we can throw them in, and just, okay, here you are. Just outright disaster, right? Broke the 50, broke the 21, didn't even stop at them, opened at the high, closed at the low, and now you're lower after hours. This is not something you want to be near. What do you want to be near? You want to be near something like this, something that's crushing earnings, right? And then going higher. Okay. And let me just show you something. And you never buy before earnings. You never roll the dice. You don't go kamikaze. It's not a strategy that you implement, right? I get it. We all knew that finance companies are going to have good earnings. This one was setting up for it. This is what it's doing after hours, right? On this news. I didn't read all the earnings. One of the guys sent me some earnings news, and I just haven't read it yet. But I'm not surprised by this. But the level you want to see, open over 73.87, and you're heading towards 86. I mean, and tomorrow this is going to move because it's in the right space. You're in the XLF. You're a 12-year breakout. Get over the 73.87. It's actionable immediately off the rip. That's how I feel about it. And here's the XLF, and I'm going to probably trade it like that, unless it's an overgap. And I'll talk about that on Twitter tomorrow. And I am working on a way to start linking more of this stuff together to be more in front of people. I do have some ideas, and they're starting to come together. Some people have been extremely helpful with that, linking it all together. See what I'm talking about here? 12-year base. Boom. Who's going to play with this? Nobody. Like, you don't do this and go back down. It doesn't happen. So just consider that. 73.87. And we're going to start moving a little faster here because I don't want to take up everybody's evening and I still have to process this. Roku broke down. I mean, here's your upper trend lines. You're broken down. I love the name. I love the growth. I thought that they were going to come out with the Google news and the stock's going to go back up. Frankly, it looks to me like they're going to come out with that Google YouTube news and it's going to rally up and sell back down. So it might be a sell the news event. Right now, you can't go near this. We're going to throw in the indicator so you can see what's going on here. We have broken the 50, the 21, the 8, and the 5, all within 2 days. You do not buy a stock that's doing that. You do not buy a stock that's rolling like this. This falling wedge is nice, but we need to stop the falling before we buy it. Very similar to what happened here, right? Let's get rid of these indicators so you can see what I'm talking about. Because I think that this is somewhat important, right? See how this line just fits perfectly, right? Boop, boop, boop. I mean, I could draw it a little bit better, but there you go. That's as good as we're going to get tonight. But you know where you can see where I'm going with it, right? And then look at that, the same trajectories. Isn't that interesting? It's funny how that works, right? So you see how you're holding here? You need to hold here. And if you don't hold this line, you're going to here. And that means you're going to sub 300s. So it could be a short, a small time short. I think that these things, I think you need to get capitulation, and we're just not getting it yet. We're just trading around. RV, LV was on my list of top 10 ideas. It did exactly what all the stocks are doing. And there's a really smart guy that came out today and said something. And if you don't follow him, you need to follow him. I've known the guy for a very long time. Minervi has been out there trading since he was like 15, 16 years old. And he made a statement today, and it's a very accurate statement. I want to get it out there. It's not the fact that they're breaking out. It's the fact that they're not following through when they're breaking out. So people are selling the breakouts. Okay? Usually that ends with a massive correction where they sell these things down, blow everybody out, and they all think it's over. And then they rally back up and we're taking out new highs. Okay, I saw something very similar to this in 98 before we had a huge run. And, I do think we're setting up for something like that. You're just not going to keep trading down every day, just lightly. Eventually, people are just going to puke stock up. Just to go through this BNTX, I'm looking at after hours. Looks like we're at, looks like you're up a little bit on this BNTX after hours to 214, 215. So there must be some news that hit on that. So just something to watch tomorrow. Again, it looks like you're getting follow through. But we had a level here of 5164. We popped our heads above it. And I always say, let's wait and see if we close there. We did not close there. So you still want to watch that 5164 level. Right now, I just have a doji sitting in the kill box, right? These two wedges that meet, that's the kill box. So this is just an outright short, right? Like I can't get any clearer about it. I was looking at this one today. This is toast. I mean, I have this cross down. I have no support. This little wedge is not going to be support. And if it is, okay, it's $90. I'm at 103. Any rally until this proves itself should be sold. Okay. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 days of the last 14 trading days are down. Okay. People are they are getting out. I thought that we were going to sell down when the news hit from, Bitcoin coming into the 40s, but I expected some basing. It's not happening. So this 90-40 level is your first level. And then your next level is right here, is this 82 level. So, if you're in this, I don't know why. Where would this move negate getting above the 113 level? You could take a look at it. Maybe we get some kind of Morningstar pattern here and we get a bounce. But your bounce is going to be short-lived. You're not going back to this 175 level anytime soon, like for a long, long time. You have to get through this trend line here. You have to get through the 21 and the 50. A huge flush would be the best thing that happened and get a high percentage off the 50 and the 21, and then you might get some love. But right now, this is a short. Let me say it again. This is a short now. So just be really careful. I would not be buying this. You're catching a falling knife. We talk about that in the newsletter. Don't do it. So I wanted to pull this up because I don't want to look at NVIDIA. I don't want to look at AMD. I'm going to talk to you about how you're going to make money off semiconductors. Okay. I walked somebody through this today, and it's very simple. You go through your semiconductor list. When this turns, which it does not look like it's going to turn right now, it looks like it's going to break, flush people out, and then consolidate and run. What you need to do is look at who the high relative strengths are on the day when the SOX breaks. How are you going to do that? Okay, you're going to do that by looking at what percentage this is down and what percentage those stocks are down. If this is down 2% and a stock is only down 50 basis points, that's a high relative strength. If this index is down 1.5% and one of the stocks is down 7%, that's a low relative strength. What you're hoping to find when you go through the semiconductor index, when this does turn, is one very specific thing. You're looking for a green stock. That's what you want to see. You want to find a green stock. But I just want to point this out because this is very interesting. Okay, let's get rid of all this. We don't need this text right now. We're going to put this up here. This is your coronavirus trend line from when it started, from the break to now. Okay, you have not broken this. Do you think you're going to break it this time? 1, 2, 3, 4. Could we break it this time? Sure. But most likely what's going to happen is you're going to come to here and hold. So what you need to do is you need to mark your level. Okay, 411.49 is the level for tomorrow. See how the level is going to keep moving up, just like that 4 trade we talked about? We are going over a lot of detail tonight, so this is going to go on for a while. But you can see what I'm talking about here, right? Okay, watch that level. What is that level going to be for this? So let's look at the SOXL, okay? So this is the smaller level, not the bigger level, right? And you can see how we're just sitting right on it. So you're going to have to figure that out where you're going to look at that level and go, okay, well, that's 8 points. It's 2%. Okay, so that would be a 2% move down, which would give this one a 6% move down. If I lost you, message me. All right, so you're roughly, and we're going to call that roughly it. Okay, so roughly you're looking for this to go to $33.5, $34. Okay, $33.5, $34 is where I will look at starting to get involved in that. You can chart the SOXL, but it trades differently because of the depreciation and everything else. But when this drops another 2 points, this is how one way to play the SOX bounce. And I do think it bounces. I think it's going to flush everybody out eventually. So nothing's changed here. People are like, oh, we got to get out of this. It rejected. Yeah, it did reject today. And let's go through that rejection on Tesla. Okay. Here's the 21-day. We talked about this on Saturday. You have to get through the 21-day moving average and break through this to push to this level. We didn't do any of that today. You know what else we didn't do? We also didn't take out a new low, right? We didn't take this low out. We didn't take this out. Okay. Tomorrow's bar is very telling. Okay. If you come back down to here, chances are you're going to break this trend line. You're not going to want to be there for that, right? But what you need to do is just sit back, watch, and wait. You don't have enough data right now. If you're long this, I would stay long. But if you take out that lower low and you take out this line and that lower high, you have to go. You have to get out of the way because you're going to go to the 200-day. And that might just be what we need. A bunch of us were talking about it today. Some of my friends that sit on desks, and we're just hoping that you just have a gap down tomorrow, flush out, people puke it, move forward, and we get this over with. But it just doesn't seem to be going on. UPST I was asked about, and I just want to point this out really quickly. Here's another one. We tried to break out above that wick, and we just got knocked down. Trying to get above the 21-day, and we can't. So, we went to 115 today, and then what happened? We just got right back knocked down. I don't see a reason to chase this here. I really don't. You can't even get above where you were on the secondary. You rolled. You are kind of setting up here. If you're really very interested in it, get above the 120 line, and then you can kind of get an interest in it. But I just don't see anything that's leading me to believe we're going to see huge volume come in this name right now. I just don't see it. UPWK was one that I traded early last year, made a little bit of money and missed the huge move, which does happen. Look, you need to be really careful here. Really careful here. See that break? You're breaking a falling wedge and you're rounding down. Okay. This is setting up for lower. So realistically, when you break the falling wedge or the rising wedge, you go to the low, just like you go to the high on the other one. Where does that take me to? It takes you to about 40.94. Okay. I would not be a buyer of this. I would watch and wait. So Vizio, okay, we talked about this the other day. I talked about it Sunday in the newsletter as well. I said they're pulling the old shake and bake. It's exactly what they did. Boy, this one ran long, but we're into the Z, so we're wrapping up. And the two Z stocks I want to go over because one's a short for sure, in my opinion, and the other one's a screaming long. So what did we do today? We just happened to open right on that support level. Isn't that funny how that works, right? Boom, here, or bounce off of it. Open here, watch everybody puke it out. Tons of rejection. You're not getting my stock. Closes higher, all-time high close. Just happens to close above this wick. All this price rejection's gone. What do you think happens tomorrow? Most likely we get follow through on this pattern, okay? This pattern's this morning star pattern. That's what I pointed out. You know, even if you missed this bar today, if you knew how to buy a gap fill, you would have bought the gap fill and then you would have made money today on this trade, right? I should probably do a video on gap fills. So see where I'm going with this? See what's happening? So you're going to hit a higher high here. And then you have a whole channel that's up here now. So now it gets even more interesting. So I like this trade. I think we did well with it today. I am very sorry for people that got shooken out here. And it's just something that as I get more ingratiated with everybody, we're going to start dealing with how to avoid those kinds of issues. You know, and they're very simple to avoid. You should not be thrilled to death with this bar today. Okay. I think this is a screaming buy still, but you should not be happy with this bar. It's a doji after a green. If you take out a lower low on this bar, you have to make sure you don't break these trend lines. If you break these trend lines, you can revert to a mean and hit there. Okay. If we break these, I'm going to wind up moving the stop up even higher than 34.40. Okay. My hope is that we're going to come down, test it, and then we're going to run. That's going to make this a screaming buy again, and I'm going to add a second tier to it. I want to test here. I want to come in low tomorrow, test here, and then Wednesday bounce. We have to see what happens. But this is a nasty bar, but we did close above that wick, which shows that this price rejection is gone. Let's see what happens. And you see how it's gone on the other side too. But this could be a screaming buy. So I was asked today how I picked my level on my short on Zoom. And, you know, I understand how people feel about this one, and it's a huge mover and it's a great name, but there are issues. See this wedge line? Okay. We broke the rising wedge. That was my key to see that, okay, this is now a short. You could have done it off the triple break, which I think one gentleman was looking at. Okay. And you can see it from here. Boop. So you can see from right here, bonk, bonk, right price rejection, okay? And someone could have done it there, 314. To me, as soon as you broke this rising wedge, I'm like, that's it. It's done. I gave it a little bit of time, and then it just showed me what I needed to see. Where do I think it's going? I am below the 21-day. I am below the 50-day. The 200-day is starting to point down. Where can this go? This can go a lot lower. I don't know how much longer, I plan to be in the short. I have, naked calls on it in the twos, some in the 300s for this week. Your next level really is 278, and that could very easily happen. There's no support there. So that's it. As always, message me. Let me know what you liked about the video and what I can do better. I know we went a little longer tonight, but I really want to hammer some of those points home to do your own homework, do your own due diligence, set these key levels, put alerts in. And, let's get back at it tomorrow. Have a good night, everybody.